everyone, and welcome back to another exciting YouTube video series brought to you by Coinfinity. And in today's video, we are going to be talking about liquidity inducement. So practically, we are going to be learning how inducement works in the market, or liquidity inducement works in the market, and we are going to see numerous practical examples. And this video is aimed at helping you understand liquidity inducement and how to identify them. So make sure you stay tuned and make sure you watch to the end of this video, because it is packed with much valuable insight and you do not want to miss out on that. So basically, for us to understand inducement, we need to understand what liquidity is. Now, if you do not know what liquidity is actually where we have resting orders that have not been executed in the market, or where there is a lot of orders that are yet to be executed. And practically, there are two major places that we can actually find liquidity when it comes to the market. One is above old highs, and the second is above or below old lows rather. So we have a lot of liquidity above old highs, and we also have a lot of liquidity below old lows. So practically anywhere you see an old high or an old low, that is an example of a liquidity pool. We call this liquidity pool because above those levels and below those levels, there are a lot of pending orders that have not yet been executed, and that is why they are termed as liquidity pool. Now, if you understand liquidity, right, the next thing is to know how liquidity works with inducement. So by the name inducement, it actually means that it is actually luring people to do something. That is what to induce mean, to initiate something. All right. So in the Forex world, or in the financial market world, inducement is just like luring people into doing something. All right. So for example, the market is going down. All right. And we know that market structure creates lower lows and lower highs when the market is bearish. And for example, you might see a short-term high taken out, and you think that that is a break in market structure or a shift in market structure, and you're thinking, oh, we are now starting to go bullish, or we have changed market structure, so we should now be bullish. But in reality, that is just a liquidity sweep, and then you see price continue going lower, and then you start to question why market structure says when you have a shift in structure that you might now be bullish. But if you understand inducement, you would see that this was just a form of inducement or a liquidity grab. All right, so inducement actually works like this. Inducement is basically just a trick to let you think that the market structure has changed. Meanwhile, it has not really changed. It is just grabbing liquidity and continuing the trend. So inducement also works with liquidity. All right, so you need to understand liquidity, and that is why I first explained liquidity and then inducement. Another thing about liquidity is that liquidity is all over the market, all right, because we have numerous highs and numerous lows. All right, so there are a lot of liquidity in the market. So best practice is to have it in the back of your mind that price is always going to go from one point of liquidity to another point of liquidity. And how do we know this? How can we identify what point of liquidity market is going to? And that is by understanding one important factor, or what people call the PD arrays. So if you are an ICT trader, you should already know what a PD array is, because that will help you to understand this inducement better. So let's take, for example, all right, we know we have numerous PD arrays, and if you're a beginner, do not panic, because we have a 5-day free forex training program for you, so you can learn everything about liquidity concept, about the financial market. Even if you're just starting out, you'll be able to learn everything from the beginner standpoint to a level where you can now start trading on your own. So this is available at Coinfinity, and you can actually get yourself a spot by signing up using the link in the description below. So if you're a newbie, you're just getting started in the foreign exchange market, you do not know any of these terms, and I suggest you use the link in the description, sign up and save your spot for the 5-day free forex training program. So For example, as I was saying, you are an ICT trader and you know we have different types of PDRAs. We have the fair value gap, we have old highs, old lows, order block, and the rest of them. Now, the fair value gap is one of my favorite because this actually explains liquidity better and also inducement. So let's say, for example, we have this daily fair value gap here, and we know that for a fact liquidity is actually being sick in the market every time, and price moves from one point of liquidity to another point of liquidity. Now, on the daily time frame, you're looking at this as just a daily fair value gap, but in reality, this is also a liquidity pool. All right, this is an inducement. So whenever people see this going high, they think, oh, market structure is now bullish, and this is more clearer to you if you go down into the 1 hour or the 4-hour time frame. And right now we are in the 4-hour time frame, and you can see how this is. We have this old high over here. So if I should just change the color of this, right, let me make this plain. Okay, so we have this old high here, and we can see how price is trading into this area. So practically, if price was like this, most people will think, oh, we are now bullish because we are now trading above this high. But in reality, we are just seeking this old liquidity pool here, only for us to continue going lower. So market structure has not really changed. It is just grabbing the liquidity above this high. So it's just an inducement, making people think that, oh, we are now likely to go higher. And most people might see this as support, stone resistance, and want to buy from here. Meanwhile, in reality, it is just a liquidity pool on the lower time frame, and on the higher time frame, on the daily time frame, it is an ICT fair value gap. So you can see why ICT actually called this a liquidity pool, and how it can help you understand a manipulation in the market, which is also known as inducement. So to induce people thinking, oh, we can now start going higher. After seeing this daily candle close bullish, they might think we can now start going higher, but in reality, that is just an inducement for price to take out liquidity and continue going lower. So there are a lot of examples you can actually use. You can see this one over here too. All right, you can see this fair value gap with this low, and if you drop it down into a lower time frame, you can see how they started breaking down. So market structure will tell you that this is a shift in market structure, so you should now start looking for lower prices, of which you can see after price took out this low, it continued the trend, all right, going higher. So one thing to note is that liquidity works hand in hand with inducement, and for you to better understand how inducements work, you need to learn the PDRAs of ICT, all right, because this will help you a lot, especially the fair value gap, old highs and old lows, how to identify the trend of market with market structure and without market structure, and how to blend all of these concepts together. And so if you want to learn that, at CoinLearning, we have a dedicated course that has been designed to teaching you everything about the ICT concept, smart money concept, how to also blend them with other concepts and use them perfectly. So if you want to get this course, you can also use the link in the description below. And the amazing thing about this right now is that these courses are currently going for a 50% discount offer. So if you get these courses now, you'll be getting them at a 50% discount offer, which is a win-win for you. So you get to learn about the ICT PDRAs and how to use them, and also how to identify inducement and do not be tricked in market structure or in the market. You can get this by using the link in the description below, and do not waste any other time. So with this video, I think that you now have an idea of what an inducement is and how inducement works in the market, and how you can also identify them. So guys, that is it for this video. Remember, you can always reach out to us on the phone number displaying on the screen, or using the email displaying on the screen. And please, if you found this video insightful and helpful, do also give it a thumbs up, follow us, and subscribe if you're a first-time viewer. And you can also follow us on all our other social media handles on Facebook, on Instagram, and also on TikTok. And until next time, thanks for watching.